All right. Hey, everybody. I hope that y'all are having a great day. I've got an amazing guest with me today. So I'm Scott Bradley with Guild Mortgage, and with me is Allyson Horowitz with Rising Point Solutions. And I probably am right on the edge of saying that correct and not saying it right.
You're good.
So,
Everybody says it that way. You're good.
I seem like I'm trying to put an R in there where there shouldn't be, but that's just the Texas way to do it, I guess.
Yeah, there you go. You're good.
Well, Allyson works with Rising Point Solutions, and they are a great teammate of mine to help folks get their credit scores where they need to be. If somebody's working on their credit or they know they need a little bit to get to where they can buy a house, Allyson and the folks at Rising Point Solutions are an awesome, awesome resource that we use often. And so what we were going to talk a little bit about today was the changes that are, there's a lot of programs that are changing. Score requirements are changing, and that's where we're really utilizing Allyson. And you're seeing a lot of news articles. I know you and I talked about it the other day that Chase, and I generally don't talk about a lender specifically, but they put it out there that Chase is not going to do anything under a 700 credit score. And that's kind of scary for a lot of folks because that hit the national media, and then folks think that they can't buy a house. And that's not true, because at Guild, we'll still go down to a 600 credit score in a lot of cases. What are you seeing across the board as far as credit scores and what folks are coming to you now?
I typically, by the time a client gets to me, they either need kind of tweaks from you guys or they're, under that 620 mark. So it's been really interesting to see, the range of scores that are asking for our help right now because of situations like, they had a 620 and now they need a 640. And, so we're getting a lot of borrowers that are really truly deserving of a home. It's just the system has changed. So it's a lot of tweaks and that sort of thing, but we're seeing, across the board anywhere from 515 all the way up to 640, 645, wherever they're at. They all need to move to a different rank. So
right. And I'm definitely seeing that because I'm getting phone calls of, oh, this lender can't do it in my loan anymore. Now can you? Because with the folks that I'm talking to, it's, hey, we're still doing, our FHA loans down there. We're still doing our down payment assistance. I'm getting a lot of phone calls there as far as, these lenders have dropped this or their score requirements have changed on this. Can you do it now?
Yeah, I think a lot of people, they don't even realize that just because you get a no from one lender, another lender could possibly do the loan. It's still a great time to apply for a mortgage, even if you're seeing, don't believe everything you're seeing on the news, or that if one person tells you, oh, well, nobody can do loans right now unless they're at a 660. That's not the case. You don't know unless you go apply.
And that's true. And I know, I don't know any specifically, but I know there's some that are still going down to the 580. The secondary thing that I've noticed as far as credit scores is, especially as the scores go lower, what it's doing to folks' interest rates. Interest rates in general are at an amazing, amazing place right now. We're talking in the mid threes, being cautious. Some folks are saying two, but you may have to buy down to get that, or you've got the 800 plus.
Right.
Yeah, but what I'm seeing is if your credit scores are below that 640, somebody like me may be able to do the loan, but it's going to mess with that interest rate.
Interesting.
And so that's something that you'll start to see come your way is, okay, they've got a 610. We can do the loan,
right?
But their interest rate may be at 4, and it may be costing them money to get that now. And so that's the next level of credit repair for you guys that may be coming.
Yeah, it's definitely been, this is our busy season anyway, so a lot of people are trying to get, situated before they buy a house before the next school year starts. But with the way that things have changed in our world and everything that's going on with, all this pandemic and, all this stuff, it's been extremely busy. It's been great. I love what I do. It's, it's very rewarding. But I definitely feel for people that are not able to do a loan like they should be able to right now.
Right. I definitely agree with that. Those are the biggest changes that I'm seeing is that FHA box has tightened up, and other lenders are backing out of programs that, the biggest thing, and I know you were talking about earlier, is just because one person says no, doesn't mean somebody else can't do that loan still.
Yeah, don't give up on your mortgage just because the first lender that you talk to says they can't do it.
Right.
So.
Okay, so points from you for credit repair. What is I would say, the one best thing that you say people can do to get their scores up the fastest? What's the easiest thing that they can manage before they call somebody?
A lot of times lenders are looking at DTI, which it refers to your debt to income. And the easiest way to manipulate that, which also improves your credit score, is bringing balances down. I mean, if you know that you have a high balance, I always give people percentage goals. So if you have a $600 limit on your credit card and it's maxed out, your first goal would be to get it under 50% of what the limit is in the balance. The bureaus, the way that they score us in our credit card usage is if you're over 50% in the balance to limit ratio, it's hurting your score that month. So each month it's reporting over 50%, it's costing you points. If you can get it under that 50% threshold, then you're gonna be gaining points. And then a lot of times people think it's right at that 30%. That 30% is that sweet spot. It's actually not. So if you can get it down anywhere from 1 to 19%, we don't see a lot of change in the points that you can get if you're at 1% or 2% versus 19%. So if you can just get it to that 19% of what the balance to limit ratio is, you're getting the most out of that credit card.
That's interesting, because I'd always heard the 30% as well. So it's interesting that it's not quite 30, it might be under 20. Get it under 20 is the ideal range for them. So.
Like literally 19% and you're golden.
And opening a new credit card is not a bad thing.
Right.
If you need positive credit. I know in my world, when I've pulled that credit and you open one, I want to know immediately what we're doing, or we've had that conversation. But opening a new credit card is not necessarily horrible as well.
Right. No, that's true. I mean, if you have what we call in our industry lean credit, meaning you don't have a lot of stuff going on, you need to show differences in types of credit. So you got to think your credit report it's not a balance sheet of what you owe. It's a history of how you pay back your debt, so that when you're going to apply for something, they know, how worthy you are, so to speak, for that loan. And so having the way they score us is having a different types of credit. So installment credit's usually student loans, a car, a home, a personal loan. That's an installment. So installment credit is where you start at the top with an interest rate, and then as you pay it back, it goes away, right? It goes to zero. Revolving credit, now that's where the meat of your credit score is built, because revolving credit does just that. It revolves. The balance goes up and down, so there's more risk assessed in that kind of card. So making sure you have at least two credit cards, two installment accounts is a really, really good way to build kind of a healthy credit profile. But there's different types of credit that are better than the others. So retail cards, easiest ones to get, least amount of bang for your buck in your score. Don't bother with them. It's tempting to do it when you're at the register. It's not a solid card to build your credit up.
Interesting.
So go to a bank, go somewhere you have a relationship with, like a bank. Or if you have a lower credit score.
Capital One.
Yeah, Capital One.
Yeah,
Any of the major banks like that are going to have a card that's going to hold more meat in your score.
Okay. So for the folks that I've had come across that need a little work, I was like, okay, go to Capital One, look down and find their secured credit card, because that's the easiest one to get, even if you have bad credit.
Right.
And then, my rule of thumb for them, and what I've always tried, is just 1 tank of gas a month. When the bill shows up, you pay it off and you do it again.
I would
just start that trend.
Yeah, tweak that just a little bit. Just kind of like that 30%, right? So if you pay off a credit card, you actually run the risk of that creditor not necessarily reporting it that next month. So what I tell your client is, go get a tank of gas. It's a necessity. You're going to spend money on it anyways. You might as well get a boost in your credit score from spending that. So go spend $30 in gas, pay 25 of it, and leave $5 carrying over. Even on the $5, it's not that big of a deal. But that way you know that it's going to report, because the creditors actually have to pay to report to the bureaus. So you want to make sure that you're getting credit in that account you're carrying.
Oh, okay, so leave $5. Okay, and you're right. You're paying a couple pennies in interest in that
Right.
situation, so it's not
Right.
bad. That's worth it to build the scores up.
Oh yeah. Yeah.
Okay. What in our world, things are changing daily. It's kind of settled down. We were all really surprised to see Chase, kind of surprised to see Chase change their scores. Not really, because them and Wells Fargo kind of really were the whipping boys for a while, and I'm not really surprised that they pulled back so far. But as far as scores coming up, I know everybody's timeline's a little different, but what's a general timeline that you could say it's going to take 6 months? It's usually my time is, all right, plan on 6 months to go from here to here, from a 580 to a 620.
Yeah,
Just
I
in
mean,
theory.
every situation is different. I always tell everyone your credit report is individual to fingerprint. Your
Yeah.
information, the negatives versus the positives, the length of credit history, the balances you're carrying versus the limits, the mix of credit that you have, installment versus credit cards. So when it comes to that, it's almost too difficult to answer an actual time frame because it varies so much. But for like our average client, I always say plan on 6 months. Our program is set up for 6 months. If it's less than that, beautiful. That's our goal. As long as clients are doing everything that we ask of them and being super cooperative in the program, we typically do get on average a 550 credit score, above that limit or that credit score that we need, which is usually about 620-ish in most cases. But I think anything that you can do if like you're manipulating those balances, anything
Yeah.
that's going to help each month, you're going to get a boost in your score. It just takes time.
Yeah. Okay. And it's kind of like ours. For the most case, we're closing loans within 30 days,
Right.
as long as we're getting everything back from the customer that we need on a timely fashion.
Right.
So, if there's something slowing us down, then everything changes. So I completely understand that. Excellent. Well, is there anything that I've missed? Anything I should be asking you that I haven't?
No, I mean, I think we've gone over a lot. I mean, I think it's really, really important to start with a lender and just start, that application process. A lender like you that's partnered with us knows that if a client comes in and they kind of think they're AP on credit score, that we can assist them. But definitely don't be shy right now in the midst of all of the stuff going on. It's still a really, really good opportunity to get a mortgage and kind of start getting that process started.
Yeah. And it's, we haven't slowed down, knock on wood, in a great amount on our side of things because interest rates are so good.
Yeah.
And houses are becoming more available. So it's a great time to be buying. So the next question is, are you and the kids surviving quarantine at home? Everybody still making it?
The days are blurring. I finally had to stop working weekends and realize, I think I was talking to you on Friday about, okay, tomorrow's Saturday, don't forget, because you literally, we're all so busy right now and you're at home and it's like the days are blurring. But no, we've been really, my husband's very cooperative, with the boys and making, time to work and let me work at the same time. So it's good, but they're not going back to school. So
no, and that, for a guy that has a wife that's a teacher, that was really a big shock through our household. So her and the boys are doing everything at home. I'm still coming to the office. I'm the only one at the office.
Right.
But I'm still here and, managing stuff here and answering the phones and doing that kind of stuff. So it's been interesting to say the least.
Are most of your staff working from home right now?
Yes.
Pretty much everybody?
Yeah. So everybody, the other loan officer, Mary, she'll come in and do an application from time to time, but assistants, processors, everybody's working from home. So we've always had the ability to be digital and be virtual.
Right.
It just really forced us into doing it. And for a guy like me that likes to be face to face, it definitely made some of those things change faster.
Yeah.
So
it
hasn't been bad. So
hopefully soon things will get back to normal for sure. Because I think everyone's gonna rush out of their homes and just be hugging everyone and just go in stores and restaurants and it's an overload and our economy is gonna boost up. And
we'll get everything running again.
Yeah,
so
definitely.
Well, excellent. Allyson, thank you very much for your time. So I will have Allyson's contact information down below. She's with Rising Point Solutions. So I just want to thank you very much for the few minutes of your time today.
Awesome. All right. Thanks, Scott. See you later.
Thank you. Yes, ma'am.